Good morning, everyone. Can you hear me okay? Cool. By the way, before I get on the free room, I just want to let you know I put on the charts, on the box charts about the commercials in gold, and they're still pretty negative. So I just want to let you know that. And even though gold is acting better, I just want to let you know I put that on there. Let me go get on the free room. Give me a second. And by the way, the trades today worked pretty darn good, so I hope you did them. So one of them we made 8%, one of them overnight we lost, and the other one we made 149%. So just keep that in mind in there. So let me go into there. There we go. Good morning, free room. Good morning, YouTube room. I hope you can hear me okay. I actually had the mic on this time in the YouTube room, so I'm triple streaming. So we had a good morning, and I was dual broadcaster with the options room, and it went fine. I could have done a lot better if I stayed in, but I'm on for an hour, and I think the first thing I want to go over is just what happened yesterday and why we did fine, and it was really going on sort of the charts I look at all the time. So just let me know. So I hope you can hear me okay. And here we go. So yesterday, bond market, it doesn't matter any all the time. Maybe someday it will. But the first thing is, it was just the violence of how fast it went down yesterday that spooked a lot of markets. And there's a lot of people, a lot of hedge funds are like 100% invested. So it doesn't take much. But I wanted to show you this now, whether it's bonds, I think you could see the bear flag. So a bear flag is a consolidation pattern after a move down. So you see it right there. Well, there were two of them. There they are, bear flags. I wasn't playing the bonds, though. We were playing the QQQ, and we were playing this move right here. I kept putting arrows for everybody. That's where we got short. That's where we covered. Yeah, I should have reshorted. I rested on our laurels. But the thing is, there were a number of people that stayed short because of what I've taught them in here. And basically, this is what it did. There you go. You had the breakdown. It never got above the ATR trailing stop. I don't use this, the blue line, that much when I'm day trading. I'll use the ATR trailing stop, and that's about it right there. ATR trailing stop, and it worked great. So yesterday it worked great, but this was all because the bonds gotten, there was just panic about Bank of Japan and all this stuff. So just, keep that in mind in there. And like I said, I hope in the YouTube room you can hear me okay. Let me know. So the other thing I wanted to show you, and a number of things, is, well, a number of things. So number one is this, is the bond market doesn't matter except for that violence, even though it should matter when you have 2 years notes at 5%. But this is what happened in the last mania market. So on the left is the bond market on a weekly chart. So I just want to show you back in 1999. There, the bond market was getting trashed. All the way there, it was getting trashed. All the way to really Y2K. And what's odd about that, you would have thought there was a flight to quality. Well, it wasn't. So the bond market got nailed. But look on the right, and this is a weekly chart of the NASDAQ. And you'll see the NASDAQ went straight up. They didn't care about interest rates. Or let's put it this way, they didn't care about interest rates yet. So there you go. Oh, sorry about that. I got excited doing all this. There. So there's the NASDAQ, the old mania with the internet stocks, straight up right here from, it was up. And then you got the parabolic from October to March 20th. I know March 20th. How do I know right there? Because that's where my father-in-law begged to open a brokerage account. So that's when he opened it. And he always said I was the best trader he's ever seen because he bought a bunch of stocks right there and I got him out and he broke even. He got in at the exact top. I was proud of myself for getting him out even. But as you see, this got nailed and this went parabolic. Sort of amazing. So the whole thing is for this to start, for the bonds to matter, you have to see like an unwinding of this mania. And the way that I see the unwinding is you got to combine trend lines. It's about all you could do. Now, you could take the trend line up here. You could take the trend line here. But the point is that everybody's trying to pick the top right now. And let's just take this on a daily. Let me see if I could go back all the way and see if there was a trend line you could mess with back there. Now, let me change this to maximum. Now I'm going to make this like this. There. So we're going to go back all the way to, let me see if I could get it, to 2000. Now this is a daily on the, I was showing the weekly. It's hard to see because I move it so much. I got to be sure I have the right one. There we go. So the first thing is, was there a time earlier to watch it? So yeah, and let me just tell you, if you only go on negative divergence, you would have gotten your head handed to you. You just have to watch those trend lines. So as you see, there was a trend line there. It never broke. You never had a trend line till right here. Till right there. Never had a trend line. So why am I showing that? You don't have the trend line. You don't have any kind of line you can draw. Maybe there if you're pushing it. Now we're getting there when you see that. And I put red lines of what you need to see. Keep in mind down here, don't laugh. It's actually a buy signal. Oversold with the blue line over zero means you're in an uptrend. You got the 50-day pointing straight up. You got the 20-day pointing straight up. Now, this can be upended. Don't get me wrong. It's not a perfect indicator. But the thing is, I'm not going to get really bearish till you see that break. Now, you might say, well, it looked like it was going to break yesterday. Well, I'll show you the NASDAQ and why on the charts that I have on the Chart Patterns Mastery every other day, I said, do not trust this on the downside. Why? Because you got oversold at support. And if you take a 4-hour and I link them, let's put NASDAQ on both. There. And you put a 4-hour, what are you seeing? Yep. Now, I didn't draw that perfect. You could have drawn it down here. And it's not because I had any tequila for dinner, but right there, you get the gist that it stayed at support and got oversold. So there was no way that I was going to short today. If I shorted, it would be for a tiny move, and that's what we did. So that's all I'm looking at the moment was that. Now, contrast that to yesterday when you got this. You got all these little overbought. I'm talking about yesterday. There. And if you take just in here, all in here, we kept getting overbought under things. So those were all good initiations on the short side. Totally different today. So there's no way. I don't want to play anything from the short side until it tells me to. I just don't see the reason to unless you see special situations. So what's a special situation? That's probably the first thing you want to know. And the first thing I'm looking at is this. Well, yesterday, also the advanced declines mattered. So the bonds had this violent sell-off, and also, and we've seen it over and over, is the advanced declines have a slope down, but they don't start to matter until they have a slope down relative to the NASDAQ and go negative. I'll show you what I'm talking about. So here's yesterday. Market's going nuts, bonkers on the opening. On the other hand, the NASDAQ advanced decline. Now keep in mind on the left, that's the NASDAQ 100. This is just going to be the NASDAQ, all the NASDAQ stocks. But yesterday, when the markets were on the high right here, this was already sloping down. And the key was when it went to under zero, when it went negative. That's the key. It can stay like this and the markets can go straight up. The big warning sign is when they go to negative and the market's still up. So just keep that in mind. That was one thing we watched. So that's one thing I wanted to show you. Like I said, a lot of things oversold at support. So I don't see anything yet that tells me craziness that you have to play on the downside, except something like this. And this is what we did this morning in the options room and the chart patterns mastery. Yeah, I dual broadcast. Thank goodness it came out okay. So I was going for companion stocks. So if you're wondering what companion stocks are, and it's not perfect, but I watch a lot of stocks relative to each other. So if you get software service, and I'll show you two things that are important. One of them is whether you use an ATR trailing stop or this volume weighted average price. I like these. These are just colors of charts that if it's under that, it's red. If it's over it, it's green. Why does that matter? If I see a bunch of the same group under it and some of the other ones are over it, yeah, I'm going to get bearish on the other ones. So that's the one thing, the red and the green. The second thing is to find the companion stocks of the stock that acted the worst. This way you could play a downside even if you're not that bearish. And the only reason I'm doing that, look what happened to some of the stocks everybody wanted to chase on the opening. Wow. Yeah, you would have lost $1.50. Now they came back, don't get me wrong, but the point is that if that group is down, it's a lot harder for them to go up. So I'm taking the one that acted the worst. The theory being that if it acted the worst and no news came out, it's going to be unchanged at least once. Look at that reversal. Closed on the low, right here on the low yesterday. It opened up today because the whole market was up. It went to unchanged. So the first thing I did is I'm like, if I want to play the downside, even if I'm not that bearish, I got to find stocks in the same group. Now, I didn't play ServiceNow. The options are a little crazy. So I took Adobe. So the first thing to do, though, is how the heck did you find things that correlated? I do this. I get up at like 5:30 to do this all the time. But these I sort of know. So you go to this. Just go to Market Chameleon. Now, I haven't even signed in. So here's the site. There's marketchameleon.com. I'm copying and pasting that and putting it on the YouTube channel. So what you do then is you go to the Market Chameleon. Like I said, I haven't even logged in. So I don't know why it does that. There, and you go to Market Chameleon and you go and put the worst acting. So I'll put ServiceNow. So that was, from yesterday, that acted by far the worst, that had the worst reversal and all that stuff. Then I go over to the left and I go to company info. And then I go to similar stocks. This is all free. Then what I do is I go down here and I look for R squared. That's the correlation coefficient. And you look, you got C-Day, Workday, Team, HubSpot, and I always throw in Adobe in that just because it's a software stock. So you could have put any of these in here. The reason I picked Adobe is because it was near a strike price and it looks the worst on an 4-hour chart after service now. What am I talking about? Most of them have gone straight up. There. It started to waffle. So that's why I picked that one. So when ServiceNow was going down this morning, I looked for a bear flag in Adobe. And we got it. There. Right where that arrow is. We did a spread betting on it going under 520 and above 515. So we did a butterfly at 63 cents and sold it at $1.60. And then we took our money. Why? Because the stock that made it go down started going up. So we were out. In fact, it's fascinating to see this. But the second this rallied, right here, 1046, is when this started to rally. Luckily, if you didn't see my alert, you had another chance on the test of the low. And you had to get out when ServiceNow was a higher low. But so we were just using the companion stock to do a trade. So I just want to show you how we did that and how we did it successfully. So it worked. So it worked great. So all about companion stocks. Now, what do you do today? Well, the first thing I want to do is back away from the short side. There's no reason. The market isn't acting bad. And on a 4-hour chart, it was oversold. And on a daily, it's oversold. It's not even, well, it's nothing. Let me just put it this way. On a futures chart, I usually use a 4-hour. On a non-24 hour, I usually use a daily. So the SPX, I'd use a daily. The ES, I use a 4-hour. So as you see, it was oversold. Now, when it gets up to this area, sure, I'll look at if this is overbought, which it's going to be, then I'm going to look for reversal patterns. There are no reversal patterns right now. So I will look for them. Now, what's a reversal look like? That, where you get this break of like support, and then you get a consolidation. So that's how I'm going to try to look at it. And there's nothing that looks like that. If I miss the first 15 points, like I did here, that's fine. I made the next 60. You want the direction. You don't care about the price. So definitely keep that in mind. So that's what I'll look for up there. But for the meantime, I'm just backing away. The problem is there are things I like, but the market has to go up. You'll see. Let's say you're long PANW because it looks like a bull flag right here. But on a 1-minute chart, it won't go up. So you're sitting there saying, boy, this better go up a lot for this to start working. That's always a terrible way to look at it. But if the whole market goes up, yeah, this could get pulled up. This could get pulled up. And next week it could get pulled up. So I'm looking for ideas for next week, but I really don't like how it's underperforming relative to the NASDAQ being up like infinity. So just keep that in mind in there. So I'm sort of on the fence of doing anything. So if I do something, I'll show you what I'll do in here. So let's say I'm bullish on it longer term, like next week. For me, that's longer term. So you see that hourly. I can take off all these lines. There. So, I mean, this is a quasi, this is an art, not a science. But if it breaks there, sure, it could go easily to 252.5, even though it's been hard for it to get up at all. So I'm looking at this. When I see something that I don't want to buy out of the money calls, I don't like buying premium. I was on the CBOE for a long, long time. The only premium I'd buy is if they're takeover stocks that have unusual option activity. And heck, then I'll buy some options. So then I'll buy options. The problem is if you go and buy the 255 calls for next week at $1.54 on the bottom, this has to go to 256 and a half just to break even. 9 points. That's a terrible edge. Now, on the other hand, if I want to play it in some way, I'd probably do this. I haven't done it yet. I'd go and do something where you buy calls, you sell twice as many of a middle strike, and then you buy the same amount of the first strike. Something like this. There, it's 93 cents. There's a big problem with this. The only problem is you're doing it early. On a Friday, it takes forever till that 50 strike loses its premium relative to the rest. They all lose premium, but it doesn't collapse until like a Wednesday. So, but that's the kind of stuff we do, because that way, if it stays right here, you double your money. If it goes to 244, yeah, you'll probably lose 40 cents. So that's the kind of stuff we do. I don't want to do it right now. Usually on a $200 stock with 7 days to go, I like to do like a 10-point wide, but I will refuse to pay over $3 on a 10-point wide. The risk reward just isn't there. It's just, at 2.5, yeah, maybe. Even if it's in a bullish spread, that's just the discipline I have. And if I miss something, I miss something. So that's the kind of stuff we do. Now I'll show you. We did a butterfly in NVIDIA today. Now I screwed it up. So we did it at great prices, but the stock started going down right here. Right here, it started going down. It looked like a bull flag right there. I did a butterfly up at that red line. It fell apart. I panicked out. So we did this. Now, let me show you the difference. We first wanted to buy the 475 calls at $1.06, but it didn't have the oomph. The stock is $1 higher than when we wanted to buy them at $1.06, and they've lost 50% of their value. Instead, unfortunately, we did this at $1.39, sold at $1.49. It's $1.92. So, you'd be up 50% when this, you would have been down 50%. So if you don't know butterflies really well, all you're doing is you're selling one vertical call debit credit spread, or you're doing that. And then you're selling one of those. So you're buying one, you're selling one. So all you're doing is basically you're buying a vertical call debit spread and you're selling a vertical call credit spread to pay for it. That's all you're doing. So that, it ended up working, and now it's going to be $2 while these are still 59 cents. Is a great risk reward. That's a good way to do it. So just want to show you, that's what I mean by butterfly. So you're buying this one and you're selling this one to pay for it. That's all you're doing, and definitely betting on it staying at 470. Now that it's $2, it's got to stay between 468 and 473. Before, when we did $1.39, it had to stay at 266 and a half and 273 and a half. It was a great risk reward, but I panic out because the stock invalidated its bull flag right here. So I gave up, and it went lower, and then I didn't have enough reasons. So that's why I did it that way. So hope that makes sense in there. So the next thing I want to show you, and this is worth its weight in gold. Number one, like I said, MACD. Can't tell you how important that is. I use a 3-10-16. Now you're going to see that there's imitations to a simple one like this. One's called like a LBR, and you can change that to exponential or simple. They come out close to each other, but that's how people are marketing it their way. That's all I'm using. So all you're doing is you're trying to identify if something's oversold in an uptrend or overbought in a downtrend. And you can do it on different time frames according to if you swing trade or day trade. So that's one thing, MACD. So very important. Next thing, companion stocks. I think this is a big deal. So some biotech stock got bought out today, and I don't remember it. So what I do is I go to FinViz. FinViz is free. So when I look at this kind of research, not everything's free. Don't get me wrong. There's some things that are worth paying for. Like I pay for TradingView. You should pay for simpler trading. But if I can get things for the same, like this, so if I could get a screener, great, then I'll do it for free. But I don't remember what biotech stock got bought out. So I'll just go, what's the top gainers? It should be in here. There you go. Retta got taken over. There. From 100 to 165. So it got taken over before the opening. What group is it in? Yeah, biotech. So what's that mean to me? You look for biotech stocks to buy on the opening. I didn't know this news. I'm a little disgusted I didn't know the news. So I got in things too early, too late. So let me show you what I'm talking about. We were in NTLA. The market got hammered yesterday. It closed on its low. I sold the stock yesterday right in here. We lost about a point, about 85 cents over a week. But we kept credit debit spreads, and I'll show you that. On the other hand, we took big profits in the shorts, and I'm like, let's net get out everything except spreads. So that's what we did. So these obviously gapped up because there was a takeover. So this is the way I like trading these. The biotech stocks always have gap risk because they could come out and say, hey, our drug doesn't work. So I can trade it intraday. I can trade it, let's say, for a couple of days on the long side, but I'd rather do call debit spreads. So let me show you what I'm talking about. Right here. A call debit spread, you're betting on the stock going up, but I'm doing it in a way that if it goes down in some bad trial, I'm not going to lose that much. And I'm going and giving it a lot of time. So where could this stock go on a weekly? Well, you see it's developing a bottom. Developing doesn't mean it's going to work. So we sold the stock and we did this instead. We went into January and did a spread. That's all we did. We went into January and did a spread, and that's working fine. Did we mess up on the stock? Yeah, I was in the spread more than I was in the stock. So it was fine. But that's the kind of thing in biotechs. So you do. So most of the biotechs, if a lot of them looked before the opening to gap up, heck, you look for the one that wasn't gapping up. And that's the one you buy because they're companion stocks. You know, just like this. Here we go again with Market Chameleon. Go and put in Retta and go to similar stocks and look what correlates. It's going to be hard with biotechs, but we'll try. Cardio, it's tough. They all go different ways according to drug trials and all that. But if one's way up, usually the other ones go up. So that's why you saw this one go up, gapped up. These are all CRISPR stocks on the left. and they all gapped up. As you see, all gapped up. That one actually went to down for the day. I don't know why. All gapped up. Yeah. So that's how I try to play them. So I try to play them as companion stocks if one of them went nuts. And I try to play them with longer term vertical call debit spreads or stock during the day. Overnight is very risky. So that's, I wanted to show you that. Now so I want to show you companion stocks. I want to show you chart patterns. And then I want to show you the other thing. There are so many. Now, I know fund managers are long, and I know the investors' intelligence is extremely bullish. I know all that. And bonds are on their low, and you got like real money and all that's been bearish for 4 months. And I understand all that and the reasons, but you got to have the chart patterns going your way. And you just don't have it yet. So while that's happening, you got to look for long ideas or intraday short ideas. Intraday is fine. But this, I know more people that have gone in and like just bought puts all the way up saying, I know I'm going to be right. So that's the next thing. I thought I'd show you when it's a lower risk time. To me, it's identifying an uptrend or a downtrend. So within that, sure, you're going to have overbought in tiny little downtrends. But I go on two things. I take this ATR trailing stop. Those are my two most important on a daily chart. The 50 and the ATR trailing stop. Those are my two go-tos. As you see right now, every time it gets overbought in an uptrend, maybe you get a rest. It's not a short. It's overbought in an uptrend. Oversold, it's much more likely to have a good move to the upside. Now, contrast that to last year. There. Now, was it perfect? Yeah, you got a little fake out here, but that got way overbought. To me, it was still a downtrend. Now, you might say, why didn't you think it was an uptrend? Because these slopes were still bad. But it was a better sale right there. I know that's hard, but that's when you got the bear flags. But that's identifying the downtrend. Definitely identifying the downtrend down in here. All you're caring about is the direction, not the price. Also, so many lost money betting on that being a bull flag. A bull flag is less likely to be trusted if it's overbought in a downtrend. So those are just the things to show you. So I just wanted you to know what a downtrend looks like and what an uptrend. Now, if you're really want to be opinionated, when this went to a new high, so you're like, yeah, it's overbought, but maybe it's a new paradigm, like down here. Well, you want to see what the first oversold rally is like. And the first oversold rally couldn't take it back. So you could even have put in right there. And you knew you were probably going to be right. In fact, you could have just made it a triangle and said, respect the break in either direction. So that's one way to do it. So just want to show you some of the things we do to try to make money at this. Now, when it comes to all these, I mean, today, now this is the next thing I'm watching. Definitely watch that advanced decline. But if the advanced decline is still up for the day, it's not as reliable as a short idea. Just not as reliable. They might go down, but it's not as reliable. So just keep that in mind. So the next thing I wanted to show you was market outlook. We go over these all the time. in here because overall market perspective is key. So like I said, oversold in an uptrend, but I use on the futures a 4-hour chart. It's getting overbought. It's not there yet. The other thing, other than using chart patterns in this MACD, it's all about price support and resistance. So the more times that you get touches, I know this seems obvious, but it isn't. It's so simplistic, most people blow it off. The more times it touches, the more it's support. It worked yesterday. The more times it reverses, it's resistance. This is getting a little tough because how many times has it really touched? But this is some schmutz in this area. So that would be the logical place for it to at least hesitate, which is what it's doing. So overall, what do I think of the NASDAQ? I think it's still that mania stage. As you see, it's been in a big old uptrend. So, I mean, you see that. And you got to wait. Well, it's getting near the resistance. Let's just put it that way. Getting near the resistance. So just keep that in mind. It doesn't mean you have to do a darn thing today. But when I see it at these upper echelons, now I'm looking for what stocks refuse to go up or forming bear flags. And I'll look for little things to play on the downside because we're already at resistance. And you'll see there's certain stocks refusing to go up. Remember I said NVIDIA got out of that thing because I just didn't like how it acted? Well, now you see it. Now you got Apple. There's a little bear flag. So I'm just telling you, that's what I look for when the broad markets get up to resistance. That's all I'm doing. So it doesn't mean I have to be opinionated, but I'm just showing you that's at least what I'm looking for. There's that resistance. So then I'm looking for what stocks are already acting lousy. So Apple went down before everything. That's all at 20 cents. NVIDIA is a monster. I don't know if you wanted to play it. You could have played this, that teeny little thing right there, but that's 74 cents on a $400 stock. I didn't think it was worth it. So I didn't do anything. We did fine this morning. I have to wait for more tells. So that's how I'm looking at that. So objectives, well, here you go. If you're a futures trader, that's the kind of stuff you look for. So there are two ways to play it. You short the break, or you short now, anticipating it and put a stop here. So you short it here, and you're risking basically about 3 ticks, 3 points. But if you're right, you're going to make 30. It's worth it. So just watch that. Let's see what happens. In fact, I'll do a chart. I'm not doing it. I'm just showing you an example. And this also could be an example that you shouldn't jump the gun, but I'll show you anyway. In fact, let me do it like this. And I'm not doing it. Like I said, I'm not doing it. I just don't think it's the right time. There. And this is where you combine different things. Why do I think it's not the right time? Because of that support. I want an air hole underneath. So I just don't see it yet. But that still could be 30 points. So you see, you anticipate here. I'll make it even bigger. You anticipate in here 158.73, and you stop yourself there. That's 2 points. All of 2 points you're risking. So far, let's see what happens. So you're shorting it right here. 15872, like I told you. Now it's 15864. You're already up 8 points. So those are the things you look for all day. So theoretically, it could go down by that amount. I did a pattern class. That's a pretty cool thing. I hope you're looking at this. So that's your first stop right there. What's that objective? Well, let's see. The amount of the previous move. That would be 24 points. 24 points in there gets you to 1544 right here. Overshoots. All I know is you're up 14 ticks. What would I do? If I shorted 2 futures, I'd be buying one back, taking my 14 points and then playing with house money. Now, the only reason I do that is you're already at support. But that was pretty cool to show you right as it happened. Really cool. Like I said, no bear flags. If you're bearish, wait for those bear flags. So you see it stop right at support. That's why I would have bought back one at support. And then I'll have a stop like right here, right at entry. But now I've made on half, so you make your day. So just wanted to show you a real life one. Let's look at individual stocks. Now, you already saw NVIDIA wouldn't go up on the bottom left. You saw Microsoft wouldn't go up. But what's the dilemma? These are all tiny moves. It's not worth it, really. Not worth it. But at least I showed you a tiny bear flag. I got to log out so I could copy and paste this. There, I'm back. For some odd reason, it doesn't let me copy and paste unless I log out and log in. Don't know why, but that's what it does. So, but that was pretty cool to watch that happen. Pretty cool. So all the way to support. Now, this is totally opposite yesterday. It broke down for that teeny move up here at the upper left, but the advanced decline went up, not down. That's how you know to take your profits quick. See, I would have broken even on the second lot. On the first lot, I would have made 13 points. But you just don't have everything lining up as a short whatsoever. So I hope that makes sense for you. So the second thing I wanted to, the next thing is something fun. There are 3 ways to play the SPX. Let's say yesterday you were bearish on the SPX, but you're scared to buy a put because it's expensive. Well, there's another way, but the commission's higher. And that's to play the thing that's 1/10 of the SPX. I can calls or puts. So if you're bullish today, you buy calls. But this is 4,584. There's a product called XSP that's 1/10. So they're both cash settled, which means you don't have to be around to get out of your positions. It just settles in cash. That's why I'd rather play that than SPY, that you got to get out. It doesn't settle. It settles in SPY. You do a one lot that stays in the money, you got to buy 100 shares or sell 100 shares of a $457 stock, $45,000 worth. The other one is cash settled. So why does this matter? Let's say right now you're bearish. I'm not saying I'm bearish or bullish, but you see it's 458.50. So the 459 puts are 90 cents. So they're 54 cents, 45 cents in the money, and they're 90 cents because you think it's going down. Now, I'm not saying it's going down. I'm just showing you the relationship. The SPX 45.90 puts are $9. So one of them you're risking 90 cents, one of them you're risking $800. And now you're not going to make as much, but it's a lot less sweating time to do something like that. The commission is higher, but if you're playing on like a 2-point move like we were yesterday, it's worth messing around with it. So I just want to show you that's a 10th and it's cash settled. Pretty cool. So a lot of us are starting to do that. Like yesterday, we just did this. I'm not doing it. This one. Oh, the 459, 457. This thing was 33 cents. 33 cents. So you buy one, it's $33. It went out at $2. Yeah, you make your almost 1,000%. Now it's only $140, but it's a lot easier on your psyche to buy one at 30 cents than buy that spread for $3. That's rough. Especially if you're learning how to do these index trades. It's a great way to play it. So any questions for me? I'm happy to answer anything. Amazon. Can't tell a thing. And I'm telling you right now, I can't give specific advice, but all I know is it's at resistance and it has earnings next week. I'm not touching it. It got oversold at support. And I see nothing to do in there. So nothing to do. So Roku, no idea. So except one thing. This is something the simpler option side says is you got Roku. What was the expected move yesterday? So a lot of the theory is if a stock goes up or down more than the expected move, it stays up or down. So let's see. That doesn't mean to buy it. I'm just telling you, this is just the theory. So what was Roku yesterday? The 27th. The expected move was 7. Today, it's up 16. So what's the moral of the story? Where is it today? It's on its high. So it's just interesting how that works. I wouldn't buy it or sell it. I'm just giving you a theory. How about UMP? Yep, gapped up, and it refuses to go lower. It's just really interesting how that works in here. Just, really cool. So if you ever see a stock up like 30 on earnings, just, and you're like, there's no way it should be there. Well, now you know sort of a trader trick. So now there is another one. Here's another trader trick for you. Analyze tap. Where was ServiceNow 2 days ago? Because the earnings were yesterday, the night before. The expected move was 31. 31. The stock opened up about 30. So you might say, well, it was on the border and the market looked great. Why would you short it? Because of what it did the night before. This is just a trader trick, but it can make you a lot of money. So the first reaction after earnings was down. And I'm not talking about just for like 1 minute and then there's a conference call that made it go up. It stayed down. Look at that. It just died after the conference call, after everything. So what happened? So 560, just remember 560. So just remember that. So what happened in there was that the markets went bonkers on the opening. The NASDAQ up 200. So where did the stock go? It followed the whole market. Open right there at 600. But where was it the day before at the end of the day? 560. So where did it close yesterday afternoon? 560. That's pretty cool. Right there. 560. Exactly where it was the night before. So that's the only time that I would mess around with something near its upper end of an expected move. That is pretty cool. So just want to show you that. So Roku, the theory is now it's just going to stay up. Now, don't get me wrong. If you see little wafts of like bull flags or bear flags, like you saw that earlier, heck yeah, you could play it to the downside. But it's got to be a day trade. So look at that. All during there were little bear flags. I think that's yesterday, actually. There. It opened up today and just kept going. So that's why I don't mess around if something goes up more than the expected move. Now, this is rough because the expected move was 7 and it opened up 7.5. So that's a little rough. But once it gets here, you don't play it to the downside. And you see the ATR trailing stop. Now, you got to go to a longer term and see where resistance is. If that was a $5 stock, you'd be all over buying it. The only negative, it's near a lot of resistance now. That's all. But there's no way I play these to the downside. The only thing I do is try to buy dips till proven otherwise. So that's what I do. And I know that the first inclination is to say it's gone up too much. I just can't play that way. The only way I play it is intraday stuff. So the day before, if the day before I saw this kind of thing and I want to play it to the downside, you got to wait for those bear flags. Something that looks like that. And if you want to know, I had a chart patterns mastery class all on bull flags, bear flags, and Brecher ledges. A Brecher ledge is a bear flag. So a prior sell-off followed by a horizontal consolidation. So most bull flags sort of go up a little. So I've called that a Brecher ledge, and it seems to have stuck. It's a lot more reliable bear flag. So just to let you know. As you see, what happened? That's what I mean by working off an oversold bad. This went back to zero, and this stayed as a bear flag. This went back to zero and stayed in a bearish configuration. So that's the kind of ways I use the MACD, even if that's ultra short term. And the last thing I want to show you, this is the way we made some big money yesterday. So it's playing the SPX at the end of the day. Now, keep in mind that if you do an SPX trade and you want to buy it and sell it, that takes up 1 day of your day trading power. But if you do it and let it settle at whatever the price is, it's not a day trade. So I'll give you an example of what we did yesterday. So yesterday, what we did is the market got trashed. We all know it got trashed yesterday. I'll go put up a 15 and a 1. That's what it did yesterday. So a lot of times we place something around the strike price with like 3 minutes to go. If a stock goes the SPX goes slightly above the strike price with even a minute to go, though the puts that are slightly out of the money can be nothing, like zero, like 20 cents. That's after a big move down. A lot of times you get that and a little blip at the close. So yesterday we threw in a 20-cent bid, a 20-cent bid right there for the 45 40s. Here's actually time and sales. Now, we didn't do a lot of them. I did one. I told everybody I was throwing in a one lot. There I am. Bought one at 20 cents. So there were more. So there's 25 cents. There was 15 cents. There was 25 cents, 25 cents. And they closed at $2.59 1 minute later. So we risked $20 and made $250. Now, the caveat, if you're going to do the put side, it's got to be a day that was down a lot, and now it's close to the strike price. And that's just a little trader trick that is actually pretty fun, not just because you made money, but because you're outlaying very little money to make a lot. So just want to let you know that's a cool trader trick. So any other questions for me? Like today, by the way, if the ES stays up this much, and on the close, this is 45, 89.90. And it's near the high. Sure, if it's just out of the money, I'll try to buy the calls for 20 cents, figuring this will stay up. So just keep that in the back of your mind. I'm going to be watching that closely. And besides that, the end of the day, what the heck am I going to do? Well, the first thing I'm going to do is look for definable patterns within all the stocks I watch. So I have a big old main list. I change this all the time. So if I have like all of a sudden Wingstop acted poorly, I'll add Wing. Let me give you my main list. This is just changes all the time, but this is mainly stocks that are active. And for the chart patterns mastery room, I share scans all the time using my main list. So what do I do the end of the day? Well, number one, I don't see anything that looks bad. How about an hourly? Is it overbought? Yeah, it's way overbought. Is it at resistance? Yeah, it's at resistance. Do you see any reversal pattern yet? No. So I'm not touching anything at lunchtime. The only thing I would touch when this is at resistance and this is, at resistance is I'd look to see if something is forming a bear flag. I think it's too late to buy anything when I see the ES this overbought. But it's probably too early to short anything. And that's where I am right now, which means I don't have the edge, so I just back away. I just don't do anything. There isn't a way to estimate the SPX move. The only thing with the SPX is to see what the bull or bear flags are. There's no way to estimate where they are. Now, if the ES had a giant bull flag, sure, I could estimate it goes higher. but I have no clue what it's going to do unless I have more tells. So I have no idea what it's going to do on the close. There's no way to estimate what it's going to do. So at all. Now, I will tell you something just from my experience of, I don't know if somebody else is on, but I'll show you something really interesting. This isn't estimating. This is just using option activity that's out of the money that somebody knows something, if you want to see this. But this is how we estimated last week. Let me find the day we did it. I got to find it. But basically what happened is the SPX has a certain expected move for the day. So that doesn't mean it's going to do that. Just price the straddle, like the at the money. So they're set, almost 7, almost 5, so 12. Just go on the straddle. Now, if out of nowhere you see this right here and you see it go to 45.91, but you watch the 45.55 puts or any of the out of the money, just stay up or go up. That's a big tell that somebody thinks it's going. There's a program to sell on the close. It's not perfect, but I'm always watching the out of the money puts and calls. So I hope you enjoyed that. Hope all these trader tricks helped, and have a great weekend.